Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Tesla Inc. quarterly report. Tesla's business services overview. Tesla offers a wide range of businesses and services across two main segments, automotive and energy generation and storage. Automotive segment. 1. Electric vehicle sales. 2. Sales of automotive regulatory credits. 3. Non-warranty after-sales vehicle services. 4. Used vehicle sales. 5. Vehicle insurance services. 6. Purchase financing and leasing services. 7. In-app upgrades for vehicles. 8. Supercharging services through a network of Tesla superchargers. Energy generation and storage segment. 1. Design, manufacture, installation, sale, and leasing of solar energy generation products. 2. Energy storage product sales and leasing. 3. Services and repairs to energy product customers. 4. Financing options for residential customers. The significant increase in Tesla's stock price over the past year can be attributed to several key developments and news. The Trump bump following the presidential election, where analysts suggested that Tesla could benefit from looser regulations under the Trump administration, contributed to a rise of over 50% in shares since Election Day. Additionally, the success of the Cybertruck as a bestseller, ranking as the third most popular EV in the United States, reinforced Tesla's brand image as an innovator. The adoption of Tesla's charging standard by major automakers further underscored its dominant position in the charging infrastructure and presented a significant long-term growth opportunity. Tesla's strong delivery outlook and improved margins also played a crucial role in the stock price increase. Elon Musk's forecast of 20–30% growth in vehicle deliveries for 2025 highlighted robust demand for Tesla's vehicles, while the company saw an improvement in automotive gross margins attributed to lower raw material and logistics costs. Advancements in autonomous driving technology, including plans to commence production of its Cybercab, driverless taxi vehicle, and more affordable car models, also contributed to growth. Elon Musk's $1 billion stock purchase was seen as a strong vote of confidence in Tesla's long-term strategic direction, particularly its focus on becoming a leader in AI and robotics. Lastly, the robust performance of the energy generation and storage segment, progress in 4680 battery cell production, and introduction of new models and production ramps all contributed to the significant increase in Tesla's stock price over the past year. The primary drivers of revenue growth or decline can be summarized into three key areas: automotive sales, energy generation and storage, and services and other revenue. Revenue growth is primarily driven by the expansion of global infrastructure, increased production and delivery of consumer vehicles, deployment of energy storage products, and investing in research and development to accelerate AI, software, and fleet-based profits. These factors have contributed to significant increases in automotive sales revenue, energy generation and storage revenue, and services and other revenue. On the other hand, revenue decline is primarily driven by uncertainty in the automotive and energy markets due to rapidly evolving trade and fiscal policy, as well as the impact of current tariff regimes on energy generation and storage business. Additionally, segments such as automotive regulatory credits, revenue, and automotive leasing revenue have experienced declines in recent quarters. Net income for the company decreased significantly over the past year. In December 2024, it dropped by $1.15 billion compared to the previous year. This decline continued into 2025, with a decrease of $2.01 billion in the first 9 months and $800 million in the third quarter. The profit margins also suffered, particularly in the automotive and services segment, where gross margin decreased from 18.7% to 16.1% in 3 months and 17.6% to 15.4% in 9 months. In contrast, the energy generation and storage business saw an increase in gross margin, rising from 30.5% to 31.4% in 3 months and 26.6% to 30.3% in 9 months. However, the overall operating income margin decreased from 11.1% to 12.2% in Q3 2025 and from 10.8% to 13% in YTD 2025. The decline in net income and profit margins can be attributed to increasing uncertainty in the automotive and energy markets, as well as a larger impact on the energy generation and storage business due to current tariff regimes. The company's financial performance indicates a consistent generation of positive operating cash flow. The data on net cash provided by operating activities for both 2024 and 2025 shows an increase, with $934 million in 2025 compared to $10,109 million in the previous year. This trend is further supported by statements from the company, confirming a steady improvement in operating cash flow. Management is emphasizing long-term growth opportunities through efficient operations and strategic investments. Key strategies include prioritizing profitable growth through optimized product portfolios and supply chains, investing in manufacturing capacity and new technologies, such as autonomy, reducing costs through cost innovation and vertical integration, adapting to macroeconomic trends and government policies. Management is also committed to generating net positive operating cash flow to fund ongoing operations, research and development, and strategic initiatives. Concerns about inventory buildup and supply chain disruption are mounting. Inventory levels have increased significantly, with a $259 million rise in raw materials and $174 million increase in finished goods from December 2024 to September 2025. This has led to substantial write-downs of excess or obsolete inventory, totaling $340 million. Moreover, there are concerns about suppliers' ability to deliver necessary components on time, posing risks to the global supply chain and cost structure. The uncertainty in automotive and energy markets further exacerbates these issues, potentially impacting component availability and increasing costs. That concludes the financial summary for Tesla Inc. Feel free to comment below, and I will be happy to answer them when possible.